Fundamentals and how fundamentals don't save you from the punishment of the market. So this comes as a reminder, né? I was having some conversation. I call it conversation because I genuinely don't care how that person feels. So this was some comment I made on TikTok. So I was putting out content on TikTok, and someone was emphasizing the fact of fundamentals being a necessity to trading. And I told the person, we're having a conversation, because conversation would mean I learn from you and you learn from me. The person was having an argument. I was telling them, okay, you make sense, but you don't make sense. You know what I'm saying? You can't make sense with that, but you make sense, but you can't make sense with that. Weak bar, but it is what it is. What I meant was that fundamentals are good for due diligence in the financial space and investing, but they're useless in trading, and especially the types of fundamentals that you're gonna utilize when you trade. Knowing the price of gold, that an ounce of gold is $4,000, does not translate to trade success, cannot translate to trade success, no matter how you put it. But knowing that there's a news event at 12:30 on the 15th of March, and you are trading on the 15th of March, and you are trading that particular pair, now that is tangible fundamental. It's fundamentals that you can actually use to make money, fundamentals that you can actually use to profit from. But knowing that gold is this much, knowing that Iraq is going to strike a deal with USA, it does not translate to trade success. It is useless. Going through fundamentals the whole day instead of interacting with the market. 24 hours, 24 candles, and that's all you get. Nothing more, nothing less. Why would you want to know how much gold is when the price of gold is on your chart? And that's the fundamentals I'm talking about. So we had a conversation. Person was arguing on some. Now you need to know this. No, you don't need to know this. You can know this. Profitable trading is about what can you utilize in order to make a profit. Then that means removing as many variables as possible, variables that cause friction in your trading, that cause deviation in your system, that cause underutilization of your process. That's what you are trying to get when you're trying to achieve your goal. The goal is money at the end of the day. It's not that deep. You are trying to get a specific account size to a specific point. And you need to know the metrics of the market, which is you can do that, yes, but your account size hinders you. If you have a small account, there's specific signals you can take. There's specific strategies you can use. If you fund too less often, you're not going to interact with the market that much. You might miss the best trades. Those are the actual variables that affect your trading, not the price of gold being $4,000 or Donald Trump and Iran coming up to a deal or Netanyahu blowing up, whatever. So it is what it is. What I'm saying is you cannot base your trading, your technical trading on fundamentals. Whatever fundamentals happen, they happen. Do they affect the market broadly from an investing standpoint? Yes. How USA interacts with other countries, and how China interacts with other countries, and how Australia, South Africa, yes, from an investment perspective, a company is going to come there. But in terms of real-time interaction and how to make money right now and feed myself right now, now this right now doesn't mean the moment I fund, I go and trade. It means now in terms of a verbal state, like according to a verb, in a manner of doing. What is trading about what do you do in trading. You try to get the current moment correct and try to make a profit from that. And how do you get that structure? You cannot get paid from a bullish move that didn't happen, nor can you get paid from a bearish move that didn't happen. Now you read that the price of gold was $3,000 last month and it's now $4,000. That means the market is most likely to go up. So I'm just going to place a buy trade and just wait for the market. Really, bro. That's not viable. Firstly, your account is not that big. Your account can't be that big. You know what I'm saying? And that's crazy. The market is reactive. Do you know how many moves you are missing because you think the market is just gonna pay you for just being passive? You don't get paid for being passive in the market. And a lot of people get trapped in this slow trading approach again. If you don't know the details to it, I think my other videos have a bit of specifications on how it actually works as a broader scale. A lot comes into your trading system, your situation, your funding intervals, your actual funding, the type of approaches you commit to or you know how to execute, the expression that the market allows in terms of what you read, the pairs that you choose, an amount of pairs you choose, things like that create the entire system. Just saying you want to trade long term is I don't want to say it's a leaking system, but it's a system that has too many holes. It has too many holes. It's incomplete. Just saying you want to trade long term and make this much money is incomplete. It takes a lot, which is your strategies, how they actually work, the pairs you choose, why you're trading them, the funding intervals, why you're funding that way, the amount of funding, how much do you offer, do you regularly fund it? Can you use that type of funding to your strategies? Remember, some funding cannot take some trades. Some brokers don't allow, when I say don't allow, that means specific methods don't thrive on specific brokers. So there's a lot to it. There's a lot to balance out and just put into a linear system. That's why we call it a system, because there's a lot to balance out, and fundamentals is just too much work, too much unnecessary work that pays you nothing. It doesn't pay you anything. But having a system to say that if I am trading Euro USD, I am going to look at the events that are occurring within the USD space, and whatever pair I'm trading, 8 a.m. in the morning or 7 p.m. for the next day, that's good, because now you can plan, the 2-day I have 2 events and I'm probably going to put pressure on the market around those times, because events actually affect the market, because it's actually real-time events and the market is based on real-time interactions and reactions. Investing is fundamentals, yes, but not trading. So the conversation basically went on back and forth, and I didn't really explain the conversation, but it went back and forth where the person was trying to explain how fundamentals matter and they don't. And the person asked me to make a video, and I didn't really make a video because, come on, bro, what are we arguing about? I'm not even arguing with you. I'm just telling you. I'm just stating what's there. And I was listening to the person. Yes, I do agree. It's due diligence, but whenever I would state my point, person, no. It is what it is, bro. I learned from you that due diligence, and now I have a video, and it's unnecessary due diligence for traders. So that's my video. But it's not to respond to anyone. This is to make people understand what is necessary work in trading, what is necessary work in building your system, and trading is different from investing. It's like MMA and boxing. They're both fighting, but 2 completely different planets. A trader can go to investing, but an investor cannot come to trading. So we'd call trading MMA and we'd call investing boxing. there is more money in investing, and there is more, it's basically the same thing. But when you feel like when you do master the element of MMA and stardom, you win, kind of like Conor McGregor and Pereira Adesanya and the GOATs, John Jones. So yeah, basically that's what it is.